Hello, good afternoon. This is Green Bicep Uncut today. And have multiple other algorithms. So the name of the game is to understand and try to game the algorithms. And if you could do that, then you might be profitable. So when it comes to trading, I think I'm gonna focus on the market here. So I'm gonna do that's Nasdaq futures. I'm gonna look at the Russell ETF 2000, and let's just do an update on it. I'm gonna delete what I put in here prior, and let's. So this is high time frame. Okay. So what we're gonna do is we're gonna open, make a copy, and we're gonna call it low time frame. And what that means, it's more of a monthly, quarterly, a chart of that nature, meaning it's not high time frame. And so I got low time frame. And so if I'm on a 5 minute, so this is a 5 minute chart. So I built this. I like stayed up to 3 in the morning and built some of this stuff. Ow! I'm sinking. Oh, I'm good. Oh, God. What the heck? Freaking, I'll have to blame it on ICT. So, let's do this. So if we look here, this is IWM 5 minute time frame, and on Friday, boom. Let's just get into the weeds. Then I'll zoom out. Friday, we're at 9:35. So the market opened, and they gapped it down. So what you could see in the second 5 minute period, they closed half of that gap right there, that wick right there. So usually in the market in the first 30 minutes it's in a range bound, it'll chop, and a simple strategy could be you study the daily the range the first 30 minutes, and probably you could scalp trades on that. I mean, obviously that's someone that is a full-time trader would do something like that. But a lot of folks will wait till after the first 30 minutes where like you start to understand the trend of the day. And so let's just hit play and watch this go. Let's pause it. So let's look at this algo. So this algo is a unicorn model, and the algo has, so news came out right here, 10 a.m. news this time. It was bad news. Got a prior swing higher breaker, then it dropped off, ran down hard, came into a supply zone where there's excess liquidity, or at this point it actually came down to a demand zone, meaning so the demand is at the bottom. The way it's defined in supply would be at the top of a range, and so you can see where the price came down, hit, and stayed. That means it's in the demand zone. So there's a order block where someone has a large order, and they want to accumulate, and you can see accumulate, and apparently they ran out of sellers, and the price shot up. And then it came back and retested that order block. I guess this is right on stops. Then ran all the way up. And during the news came out, and it was in balance, right? Because the price dropped so quickly. It's real because it happened, but the fact is it wasn't balanced, and so it needs to rebalance itself. So we had to wash down, had to rebalance here, clean it up. This is still an imbalance, at least on this time frame, because then it pushed up through, consolidated because we hit a supply zone now. This is selling up top. So consolidated for 5, 10, 15, 20, 25, 30 minutes or so. and finally made a thrust through it, a swing high breaker, took that out, probably with volume, right? And then ran up, retested. A lot of people would enter here, put a tight stop, and technically, you may have gotten stopped here if you dig along there. I don't know. It just depends on how much confidence you have in your trading system you designed. And then the rest is history. Ran up pretty good. So this is actually March 3rd. So if we go to what we're looking at, this is 5 minutes on Friday, and then watch the similarities of it. So to be clear, I'm going to add pre-market because the news happened during pre-market. So we're talking Friday right here. So this big wick is the news, right? So this big wick is the news, and then it came down into the demand zone, ran back up, filled up that fair value gap, ran back down, boom, demand zone, back, retested, dropped off, then ran. And so if we look at our model here, boom, ran down, up. Anyhow, I'm sharing here, so I'm not like trying to compete with anybody out there like Mr. ICT because I don't know my crap like him. But the point is, I'm learning here and just talking out loud and recording it. So at the highest level, when you look at a chart, let's reverse. You have your demand and supply zones, and once you could understand that, then you're able to really see the light. So the question is, like, when you look at something like this, it gets real messy looking, right? Where would you find it? And so it just depends on time, because time is fractal. So a 15-minute, 1 hour, say 1 hour, 1 day, 15 minutes, they're all fractals of each other 1 minute. So they'll replicate each other to certain degrees, and you want to see a confluence when they all are in agreement, and then that's when you would trigger a signal, a really strong signal of doing something. So in this case, if we get down to a 5 minute, you could clearly see this is a zone here. It's like chopping in this tight range, and this is a zone here, and this gray area is basically the support for the demand zone. So it comes down there or tries to approach it, and someone's buying heavy, and that's what you see here. And that's when you want to enter a trade typically. Well, it depends on the confluence of what you have, but the point is there's good risk reward. Many will enter because if you enter here, you don't know if it's going to go down, right? If you enter there, you don't know if it's going to go down there. So if you enter on the second test, you would put it at tight stop, and unless you back tested a system, you don't know how many failures there are. You're just gambling essentially. So you got to kind of have a lot of experience trading and know, like, when you get these clean bottoms like this, 1 tap up, 2, 3, typically that becomes a demand zone, and you can see it clear. Now sometimes they do break, and that's why you would get stopped out, and the trade would be over, and then it may even run back up without you. That's just the way it goes. But that's like simply like scalping from the bottom. The smart way to do is you recognize a imbalance, and that's going to be the target. So that's the target. You test the bottom of the zone, go long. This would even be a better entry because it's testing it again, and the odds of it breaking through on the second time are greater, because when you come up to a resistance level, the more times you hit it's like slamming through ice. You jump up, like down here. If this hit enough times down here, it'll break through. So it's like just trying to imbalance itself out the entire time. That's the way this stuff works. And so once you understand that, then you kind of start to see the markets from a different light. If you go in and do a 30-second chart, everything will get can get confusing because at that point you're just doing like tick by tick type trading, and it's too micro. But you could see it. You could just follow a trend and do quite well, especially in fast markets. So when the markets are fast, your time frame probably should be shorter if you're a day trader, in my opinion. But I, at the same time, shorter, but then I would definitely use like a longer time frame just to guide your direction of where you're going. Like, where does this market want to go, right? So you can see you're clearly in a downtrend here. So if we're here, you'd probably like lean towards down. You got this swing up, but still continue down. And now it looks like we're in an uptrend. So let's look. Are we in an uptrend? See, it broke right here. So that uptrend only lasted for a few days. So you just got to shift with price because you don't know. So for a few days, you were just consistently more in a downtrend, probably buying puts. And now we're flattened out. It looks like we might be in an uptrend now. So this would be more of a time, like probability wise, you would be leaning towards calls. But the fact is, you don't want your biases to mess anything up by buying, thinking calls are a way to go. It really is that moment in time. So when the market opens, that first 30 minutes, it's critical to watch what's happening and then what happened overnight in the prior day, and just saying, where is the balance of volume occurring? Does it look like things want to move up? So here it looks like things are kind of wanting to move up, just like, because this is, you got a low here, then you get a higher low, which means it wants to move up, then another higher low, broke it, but it sat in this demand zone essentially. So that is like major support, and then there's looks like a demand zone is being created here too. Then it runs up, and this is where the algorithm effed everybody over on Friday. It was beautiful. So they turned the algorithm on, a news-based algorithm that we're looking at here. Boom, and they just swiped everybody and ran. They just stole everyone's money, and that's what this was. Swipe and gone. And so that's how it played out on Friday. So that is like why traders lose, is because they don't really understand. And hell, I've been losing plenty, and I've learned a lot, and I'm starting to make money now, which is beautiful. But it's definitely a lot of time and effort to get it. But number one is risk management. So if you enter a trade, doesn't matter where you put on the chart. You got to cut your losses extremely short, like immediately if you're wrong, and then re-enter if you can. If you have capital, re-enter if it takes off, without overpaying, obviously, close to your original entry. Because sometimes they call them turtle soups, and you'll see these long wicks. Let's find a good one. I would call that a damn turtle soup. And it's usually at the bottom of a demand zone. So if we're at a 5-minute chart. So if we go in a higher time frame, so we're looking at October 5th, 2023. So let's go to let's do a 10-minute, double the time. So you could see right here, this is the turtle. Nope. Where's our turtle soup? Right there. So you could see this turtle soup started being created. I'm calling it that. If I'm wrong, I'm wrong. And it's like these bobbing up and down, and it's just it creates a gap in time. So at 10:30 to 1, holy crap, someone's trying to trade this, and they're mentally getting worn down. So it affects you how you are. It affects your dopamine, and your dopamine is like wearing down, and time slows down when you're under stress. So you're under stress, and this from 10:30 to 1:15, say, could feel like 5 hours, or even long. It could feel indefinite, and because dopamine's dropping, the algorithm's just smiling away as you're getting chopped back and forth watching, and by then right here's the last wash. They call this a Judas, swing. Well, it's a tweezer bottom too, but it's like one last swing down, swings everybody out. God, this is like classic textbook. So it washes all the retail out and then takes off. Unbelievable. So the thing is, why does it not keep going down? We don't really know. Like say you don't know about algorithms and all that stuff. You don't really know. It could keep going down, but the fact is, if you're an experienced trader, you know that these occur. So the question is your sizing. So if you size too large, you would probably put a really tight stop, meaning too much. But if you don't size small, you likely wouldn't have got stopped out here, and so your risk reward needs to be a certain ratio. But with knowledge, you know these occur, and so we're looking at 10 minutes. So there's 10 minutes where it went down. So if you could know for 10 minutes, and you know if you've got an actually okay entry, meaning not too far up this candle, you should be able to hang for 10 minutes, even though it doesn't feel good to see you're in the red for a little bit, meaning you're down some. So if you're down too much, meaning dollar wise, not percentage, that means you're oversizing. And so this would potentially be a really good entry on the way up on the second candle. Let's tweezers bottom. The slopes here are negative, so I honestly would probably have waited, like if I'm like in my state of mind where I'm focused right here, and entered more towards the high price when I know the slopes are changing. And these slopes are moving averages, and it takes a lot of energy and momentum and flow of volume and price data to create the trends there. So it's very mathematically driven. They're not just little lines. And so you look at this, you're buying in at the bottom of a demand zone. So the next target would be the top, the supply, because it's always balancing each other. So you're buying here, you're getting a tweezer bottom, you're getting this turtle soup looking thing, then you get the moving averages turn. So regardless, you know the odds are on your side, especially after the price goes to about 170.25. And I'm sure other traders would argue something different. Some would enter up here. Some probably would gamble and enter there. Entering here would be very risky in my opinion, because the slopes are so steeply going down at 45 degrees. So you at least wait to like this short moving average improves a little bit and starts to turn positive to flat, and here it flattened out. Yeah, and so that's key right here. Another thing that would have made me hesitant to want to enter is we have this yellow daily range. It's like below the daily range, and I don't know. I gotta see. There's some statistics on this, and I don't know the rules exactly. But typically the daily ranges, a lot of times the stock will sit on one side of it all day. Once it breaks through, a lot of times it'll sit on it, because we had this specific algorithm. It really probably screwed a lot of people over. Oh, this is actually Thursday. But yeah, so this looks like a manipulation algorithm. I don't know what it was. There's a turtle soup there. It just like would chop everybody up. I don't know. But yeah. So that is TA, some just generalities. So then if you go down to a 1 minute chart, right? Like, let's find something that's choppy, because it's never that easy when you're like live trading. So this is choppy. So the moving averages are moving down. So that just tells you don't really, if you go long, you got to be doing, well, you're probably looking at a 30-second, or yeah, it just depends. That'd be, basically you don't want to go against the moving averages. That's what I'm trying to say. And then, so the moving average, you see these two coming together. So that means they're actually the rate of change, the convexity is starting to change. So the direction of the price movement is starting to change, and you can see that up here start to turn, and then you get this cross. That's typically a buy I like to use. And then you see the moving averages, sure enough, and this buy is from one of my indicators I have over here, and that gave a buy. But saying that, if we zoom out, and that day you already ran way up to the top of the range. So your risk reward is not great. Like you're buying towards the top of a run. And so that's measured standard deviations up. And right here, these percentages are the basically saying how where you stand in this range of data. This is saying you're towards the top on a 20, 40, and 60 period of time over 1 minute. So that means the risk reward is not great from that standpoint. I didn't understand that before, but now I understand it. Low time frame. And then these are just the average range of the price movement. So over the last 15 days, that price has moved an average of $3. So I have this multiple, so you can have an understanding of like where the price is going to have a high and a low, a max and min of that amount on average, and that gives you a understanding of how this works. So it's more about recognizing that, and once you understand the structure, then you could essentially leverage that to be profitable. So what else do we want to do here? I want to go exercise actually. So it's 101. Let's just we'll do a high time frame a little bit, or low time frame, which is looking at like a high like a quarterly chart or something like that, because I need to do that regardless. But I want to exercise, and I have something I have to do at 2:30ish, or yeah. So I'm in low time frame, so I want to get rid of these things. I don't, Judas, let's get rid of. I'm always experiment with this stuff here on the left. You see, like, ooh, I like that. See, I like seeing this on it. I'm gonna hide it though, and I just want to clean the chart up. It's like all this junk. And what we're gonna do is we're gonna delete my drawings. And we're gonna, I don't know what this is. Oh yeah, we definitely don't want that. We're gonna take the daily range out. Now look at this. Doesn't that look cleaner? I don't know how to click that, but that's like. So now we're looking at IWM on 3 months, and it looks like, I don't know why these lines are drawn in here. Looks like, hey, a sell. Wonder why I triggered that. What indicator? I still have quite a few open. So, all right, let's look at this. I'm moving get rid of the moving averages. They're just annoying. I'm getting rid of everything. I'm not gonna delete it off this chart yet, because I'm gonna keep this chart indefinitely. I'm still building my trading system, so I'll probably continue to post videos because I'm building a trading system. I'm using some methodologies that I'm learning. I could show you. So if I go, Joe G, he is a master of trading. And who's this green bicep guy? The Vader here. So I'm actually on his Discord. It's pretty amazing. He's excellent. Nice guy. Super helpful. He's amazing. I'll just keep it simple like that. Oh damn, ICT's still talking. I don't think you guys will be able to hear this unless I put it on my phone. We could have it in the background. I don't know if it'll pick up.
We've had inarticulate Michael. We've had the trader, Michael. We've had the family man, Michael. We've had an excellent back and forth in
Sounds like they're
emulating
wrapping up.
and
So anyhow,
what our conversation was for nearly 5 hours back on, I believe it was April. My notes are correct. It was around then.
so what I'm doing is I'm looking at a quarterly chart. I'm just looking at
Talking about
imbalances.
models and trading
Because
and
we really don't know if it's going to go
using
up or
quant.
down, right? On a big
Is
picture,
there,
the economy says we're going to go
I got a
down,
headline that I'm going to
and
take
if you
down.
look at like
Is
the
there
trend,
any
it's in a downtrend clearly, and
field, maybe, is there like a
yeah,
special
we're making this is
setting? Or is there a special way
if
of
you take out the
positioning
wicks, we've been up,
price
up, up, then we turn
range?
down.
Or again, this question
So taking the
also
wicks out, which are like quick price movements, but
so
this is
key
quarterly. So anyhow, the
to
point is I'm looking for
what
imbalances here, and this is an
actually
imbalance right here, so I'm gonna
happens
mark it.
outside of the
And
fundamental
I'm gonna
factors.
actually use
Again, I would say the 61.8 is also a real big deal just because of the Fibonacci of life, right? And our elbows, our hands, and bending of things. Is there a certain way in 2023 today that Michael would explain a fib setting or a way in which to key off of a fib that he hasn't already utilized within your body of work? Just asking. I don't know. Is there any
None that I would
special?
none that I would make public.
Okay, that's a very fair statement. Very fair statement. Okay.
without the
Okay.
wicks here, this would be an imbalance.
So the short answer is yes, and that's not for us to know.
With all due respect.
And that's you.
Now we're on a monthly. You can see the 3 month imbalance.
I just
You can
would
see how
be
these were
remiss
kissing it
if I didn't
perfectly, like magic,
ask,
right?
being such a fib trader,
Let's
fib-based
go back to
trader.
3 months. It's fun building this when you see the magic start to
I'll toss
happen.
this out there, and you'll see it mentioned in one of the books. This is another little extra. When I was teaching fair value gaps and I was teaching standard deviations, I did not spell it out for charter members. I hinted at it because most of what I taught prior to having a formalized mentorship was me laying down breadcrumbs. I wanted to see if anybody else would pick up on some of the things.
Now I don't know if this should go here. I'm putting it in here just because I think it's interesting. It could be an imbalance.
I'm certain once I leave, there's going to be all these people that come out and say, "Yeah, I had this figured out," but you've never seen them up to this point.
But on a higher time, so we're on a 3 month, so we're gonna drop it down to 1 month, and I'm curious to see if this red line ends up being imbalance, and you'll see it'll pop out.
Deviation, which is equal distance measurements. Okay, for the folks that want to try to.
They're talking about standard deviation, if you could hear it.
You don't know what the fuck you're talking about. The measurement of a fair value gap, a buy sign imbalance, sell sign efficiency, or a sell sign imbalance, buy sign efficiency, either one. Okay, if you have that measurement from high to low, and you run standard deviations with that, if you get a standard deviation of that equal distance replicated above and below, and it agrees with a premium array that you're already anticipating as a draw, you have increased the probabilities of that trade exponentially.
He's talking about confluence.
If you include
See the range?
deviations of a new week opening gap or a new day opening gap with the same thing, if you have convergence of those levels with those deviations above and below, if you're bullish, you're going to focus on the expansion higher with standard deviations moving up. If you start seeing these overlapping, and it has to be for Forex, it's going to be 3 to 5 pips. For futures, it's going to be 2 to 3 handles. That's how tight it's going to be. If you start seeing that convergence together, those targets are most of the time my targets. That's the real thing I'm aiming for. And I'll take partials along the way that make sense to what I've shown publicly. Where, oh yeah, this is a buy-side liquidity pool on the 15-minute time frame, but I'm using the structure that's on an hourly chart. But since there's a reason to take something off, and I'm teaching students to pay themselves because they're not going to have the ability to hold on to the full trade. I already know that. But if I teach them, it's okay. It's allowed. It's permissible for you to not have the ability or the courage to hold the full trade. Take partials here. And it gives them mile markers to reach for. Say, okay, it's real hard for me to hold for this one, but if it gets there, I'm going to take the profit and I'll close the trade off and I'll just watch and see what happens, which is great. It allows for growth. But standard deviations can absolutely be mapped on imbalances, inefficiencies, and
let's do it.
Woo! New day opening gaps.
Awesome.
Saucy. After my boy Zeusy, I love measuring gaps. I mentioned that a little before. I love hearing you say that. Wow, traders, getting the sauce from ICT.
Hell yeah.
Trader roundup. Oof.
See, it's all about imbalances of volume.
Thank you, Michael, for taking the time and the opportunity. Selfishly, I'll ask, what are the chances or likelihood? I mean, you're going to hang up. When you say you're going to hang up Twitter, does that mean that
we do 15 day
or a chance of us having something like this?
Now this chart's getting nasty looking, just too much crap.
When you hang up Twitter,
see,
you're
boom.
literally hanging it up and it's done, and then it's just your SoundCloud.
Yeah.
It's a 3 standard deviation move, essentially.
I'm absolutely leaving Twitter.
Or 2, technically.
I have in mind
from
what I want to say in a short little video that'll be posted on Twitter. 11:59, November 11th. So that way I took it all the way to the last minute. And there will be no tweets. I will not like any posts. I will not retweet someone else. I'm not looking at my Twitter. I won't have any association with it. But everything will stay there. I've never deleted a tweet. I've never intended to remove them. I'm not going to take the account down. That doesn't mean that Twitter won't remove the videos that I have with music up already with trade executions. That's why I've already said, if you like those things, you might want to download them and save them until I get them up on my own website. Now, I can't promise when I'm going to get that done because I'm still looking at people, presenting their submissions for trying to make the $5,000 for, redoing my website. I haven't picked anybody yet, so in case you're still...
I'm just trying to identify imbalances. I marked the swing lows and highs. I should do...
has allowed for one thing per week, but not to the degree that, like we're doing here today. No way. It ain't gonna happen. But she said one day per week, and it could be on a weekend day, but I cannot, and I'm not allowed to do anything throughout the week. It's her time. It's family time, and my job is to be a husband. So
there's 24 days left in this candle.
And I get one weekend day where I can do something, but it can't take a lot.
The high and the low
I don't know what
should be marked. I don't want to mark this anymore. It's getting messy looking. Let's go down to 1 hour.
I'm sure it is, mate. I mean, for sure.
To answer your question,
Giant
I
imbalance.
around it inadvertently, and I didn't mean to do that. I don't think I'm gonna have the opportunity or available for the opportunity for like something like this again. And I know some people were saying that Top Step were interested in having me on it. I really don't really want to do that. I have a lot of people that have podcasts. I have a lot of people that have larger functions and things that I don't want that, because you hear me saying I don't want to be here doing it, and if I'm on here doing things like this, it's communicating the opposite. So I want to diminish. I want to enjoy the casual.
See the imbalance here? Imbalance
it.
there. This is a giant imbalance in general.
I want to just slowly.
So price will move fast through it.
Say a friendly goodbye, and I'm gonna still be honking everywhere, but I'm not gonna be engaging publicly. That's all.
Wow. I feel honored. I feel honored that you're here. So again, thank you. Thank you for coming in and doing this today. Very privileged.
I should have made it.
So, yeah, man, I want to leave you with any final thoughts on that note.
Yeah.
With, you know, our time kind of wrapping up.
Okay.
Knowing that this is a very unique opportunity.
So if you get a
closeness that the community gets with you that otherwise is going to be limited. I mean, we're in October.
Yeah, I gotta go. I gotta exercise.
Less than a month
So
away, winding down.
that's part of who I am. I have to exercise a lot for many reasons. I like to do it, and
Bucket list item that you want to do that you're willing to make
I'm just literally looking at all the candles. I mean,
burning desire.
I could probably use a function to find these, but I'm eyeballing it. And so just like this, see this gap here? Boom, down becomes a new resistance. Over and over, and then finally push through. And then, yeah, the rest is history. So I think where I'm struggling the most now is Monday morning. What direction is the market going to go? And you should really take a higher time frame to determine that. We can see on this low time frame we got a little base going on just over 1 day, so that's not very much. So let's go to like a 3-day. Let's see where are we at over 3 days. And so now I'm still in a high time frame chart. Even this is low time frame, but now we're getting down to 3-day. That's high-ish. So over this period of time, and I like having this here. So this is a 3-day candle. These are 15 minutes, and they're very handy just to give you an idea of like what is happening at that specific moment. Anyhow, I'm not going to do this now. It's taking too much time, but I need to move that over. So when looking at this 15-minute, usually I'll like be on a lower time frame or higher time frame. I'm sorry. Higher time frame means like a 5-minute chart, 1-minute chart. So let's go to like a 10-minute. And what I'll do is I'll look over here and I'll see. I don't know where it is. It's like hidden. Oh, it's behind here. Not sure what's going on. So let's right click settings. Dang it, I don't know where it is. I'm not sure what's going on. Yeah, I don't see it. So there's candles, but anyhow, the point is I will look at this 15-minute thing and generally see where the price is moving. So let's go here. And I need to go. So everything takes time, like move to front. Oh, that didn't change it. Anyhow, so Monday morning, market's gonna open. And it ran up. It's going sideways. There's a imbalance on a 10-minute chart here, so that could be an easy short-term target. Because usually I think the market wants to go to the closest imbalances first, and then the rest are a little bit farther away in price. But news dictates. The news is catalyst. When you get news, you got to follow the news. The news will be a catalyst. So if you go to trading economics and there's like, no, see what type of news is on Monday. Oh, great. This is ridiculous. Why would they have 3 people? 4, 5, 6, 7, 8, 9. Holy crap. 10. Now the market might react to some of these. So they have 10 speakers. Like it's like that. I counted. I was going fast. So.
Some parallels with what we've been talking about. 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 Some parallels with what we've been
Yeah, there's not a lot of news. So the trading days, Monday, Tuesday,
Can there being some form of withdrawal? I mean,
Monday and Tuesday would
just
be really good trading days, but they essentially, I mean,
for that
now you gotta like, who the heck knows what they could say? They shouldn't say anything, so let's presume they don't, and you would trade that way. But to me, this is annoying. So
I want to say it's a
it's
dopamine hit,
pre-market, which is
but
good. So then you only have to worry about him, and this is public. There might be other stuff out there
I don't know,
leaking.
man. I don't know. Just curious. Like,
So,
your wife has voiced skepticism, but if you were to utilize it
oh
to
crap.
train like a professional athlete, leaving or
Well, the market's
retiring,
not open, so I can't do anything.
I at least have read
But
and
if
heard others' accounts in saying that there is this withdrawal, that it is really difficult.
I'm already anticipating it, and I have been trying to condition myself because the level of output, if you've seen on the YouTube channel,
yeah, so now I'm
the
going to
level of
switch charts because I want to get
oh,
to
sorry.
a high time frame, and I don't want to do it in this chart. I'm breaking
It's
like,
all about ad revenue. If you look,
um, yeah, that's what happens. Like, I draw the lines around one time frame. I guess what I could do is just use.
for the last couple months, do less.
Let's do a 90-minute. I'll just use this chart indefinitely,
My Twitter.
high time frame, and I'll come here and take a look and say,
And not feed it all. Get
well, where are my targets? So my targets right now are 176 and 172. So I would write that down, which I will do, and I'll print this off at some point once I'm done cleaning it up. Yeah, my pencil like never walked away like normal. Magical pencil. I have plenty of markers.
it's going to take
So
my wife observing me probably not being true to myself, and that's why I have to also be cognizant and have to be aware that don't look like you're miserable because you're not doing what you're supposed to be doing. Because
so
I've
those
seen
are
it
your
happen,
targets.
and I'm afraid that I'll be the one to be switching
So then the next question is, all right, we know our targets were potentially and may want to move. So how do we determine that?
so I have
So
to put a
then
lot of pressure
you
on
would
myself
be
to do something,
on a lower time
and
frame and you would watch
I
price
totally
action.
agree with
That's
you.
how I would do
You're
it.
going to do something to get
Now,
moving.
there are certain patterns that become
And my
obvious
wife is like, I
to
was
the
thinking
structure of the market.
for you to be
Like this,
I've
for
been
example,
I've been that guy since
if
1980,
you were
and if you follow me for
not
any
using
length of
any
time,
biases,
that's when Inner Circle Trader was really
so let's do,
before that.
if you're not
I was
using any
Embark
bias and you come
that's
over here
who I was on Miracle Online. That was me.
and the market slams down like that, typically you get a bounce, right? Not always, but there's a lot bound. Typically, when you get a big multiple standard deviation move, especially on news, it's a bounce because it's news. It's not just the momentum of the market from like just trending down all day. So I can't get that now, and so that would be a bounce. So then you go to a lower time because the target would be the half gap right here. And then so let's get down to a, just do 1 minute. And so
I'm just a conduit that says, hey, look here, watch where it goes. Oop, it goes there. And I try to make an emotional response
I wouldn't do anything. We put in a low,
lives on emotion.
then we got a lower high. So there's nothing there. I mean, you can that can be a trigger on that time frame. Same here on the 30 seconds. So let's just play it a little. I mean, some traders might just take this and put a tight stop, thinking it's going to go there without really like letting it form. But I think that's dangerous. You got to have a setup. You, having just a target by itself is not enough. Okay, now we're getting somewhere. Nope. So now you see it ended up trending lower, so that's good you didn't gamble, right? Because I said it wouldn't be wise. Market's actually pre-market, but let's say this wasn't pre. It doesn't matter. So we're still going lower. So everybody right now, this sentiment is extremely bearish right now. So everybody, retail is like, oh, the market's gonna tank. Sorry. 46 minutes. You can watch it fast and skip ahead. So let's keep playing it. So the sentiment here, everybody would probably be ready to short. We actually got a cross on my CCI signal. So that is technically a buy. And you see how there's a buy there, and it kind of, then it went up, and then you got to sell. That's just one thing. Like, if you're using indicators, you generally want to use more than one. Like, stochastics with this is quite powerful. And I don't think I have that in there. If I want to play this, like if you're going to gamble and try playing this, you would need stochastics with it as well to make sure there's like basically positive divergence. It's really starting to turn over. It helps. A lot of people like the ADX. Same thing. You're not doing anything because there. I mean, if anything, you would have shorted up top, but I wouldn't play it. So if we were shorting, yeah, I mean technically you could have shorted up here where you're getting lower highs over and over. You play one of these and short it, but generally like you want to have a target. This half gap wasn't formed already, so I wouldn't have probably have done that either because you didn't have a real clear target. So you got to kind of think it through before like jumping in head over heels. All right, so now the price has changed a little bit. So we're on 30-second at 5.5 speed. So it's going a lot faster than each candle's more than 30. It's going way faster than 30 seconds. So it would sit on each one of these for 30 seconds, bob up and down. But you clearly, now we're starting to see higher highs, right? Down, a high, a higher high, then another higher high. It goes up, a higher low, higher low. So the trend is up. So technically, with that fair value gap there, I bet you some people are going long here. The pros. I bet you the pros bought here pre-market, and then they're long. Whoops. With that target. And so now you just have a stop, a trailing stop, a few points below, like something like some people will use a couple candles. Some will use like this is a 30-second. I mean, we're talking really tight time frame. I would probably actually. I'm gonna pause this. The market is open at 9:30. That's when price is gonna go move faster. So I'm gonna speed it up then slow down. I mean, I'm doing it 1 minute instead of 30 seconds, so it goes faster. So it's still continuing. So you're in the trade, you didn't get shaken out, and you're up a lot, actually, probably at this point. And then you hit the fair. That's your target. So you would sell like 3/4 your position. And sure enough, it dropped back. Actually, it might have got stopped out right here. I don't know. It depends how tight your stops are. Some people let runners run, so they won't sell that last runner indefinitely. So you still would be in it if you didn't do that, and you just let it ride out until you end a day or whatever your rules are. You gotta have rules depending on the size. So then now we're okay. So at this point, if it was me, I probably would have sold my runner here, then would run up, and I'd be pissed. That's usually how it works. So I'm gonna speed this up. And so we had a higher high. That's that's still positive, and that's actually a higher high. So technically, the structure hasn't broken down. This is becoming more of a demand zone, right? It's becoming support. Saying that, it could flip either way, but structurally, this is our first lower high, so that's a negative. A lot of people probably would have sold the runner right there, I'm guessing. Most people that make great money don't sell the runners and they just let them run, and randomness allows them to achieve great wealth. That's reality. It's usually randomness. But professional traders are usually making good money and just accumulating small dollars. So this is just chopping like crazy. So let's speed it up. So it's chopping, and so at this point, people are exhausted. It's hard to make money in these type of things. From I mean, these look like small price movements, unless you're like just scalping small dollars. And now right here, we got like a change in structure, you would call it. So this was, I would call this change in. These are my definitions. So meaning they call certain things change in structure. I don't like know officially what the change in structure like terminologies, but during this you could see it hit there, you got volatility picked up, and then you got a lower high. I call that a change in structure. So then we went down, and then you held here, and then we got it took out this. So now we got another change in structure because we're getting higher highs again. So now we're gonna go up, and sure enough, we go up. Well, I don't know. It just depends. You know, it could go at any speed it chooses. But you would. So the question: would you go along here? If I was trading, you kind of potentially here, like you're buying. I don't know. It's just so choppy. I'm going through this like it's real trading. Would I actually try to scalp this thing? And I'm like looking like, okay, where are my targets? We know that's the target. So I probably know myself. I probably would go for it. I'd probably go up, and then I would probably wait until the second candle, like right around that, like right in the middle of that candle, and go long. If I knew myself. And we're kind of in this area where, and sure enough, it ran up, came down. I'd still be in it, and I probably would have got stopped out right there. So I would have made some money. Man, this thing chopped. I think I have my scaling wrong. Let's do this. Yeah, I do. This shows reality how it was. Like, these are pretty big moves. And then that was a massive move. So we had this massive move here. Then I'm saying buy here. Most people are like, oh, are you nuts? There's a fair value gap there. So technically, when we're coming down here, they didn't give you a really good opportunity to buy down here. They really didn't, unless you like use the model based thing and knew them based upon that model. That's where you want to buy. And ultimately, the funny thing is, that's what I showed you. This is on March 3rd, 2023. Oh crap, wrong one. And this is October 6th. Similar model, a news driven model. This market was wild. Wow. So I had like 3 really good trades all over 30, around 28 and up. Then I had a crappy one right here. I took a trade and I screwed up, and right in this area. And the reason why I screwed up, I could have made a boatload of money. I was talking on Twitter Spaces, and then not a boatload, but some, and I wasn't paying attention. And then on top of it, my entry was like not great. Like if I throw in moving averages here, like I was talking about earlier, there they are. So if you look at these guys, yeah, I mean they're obviously way late. It would have it would have been a sign like, yeah, it's just not. The point is, it's a forced trade. Like, there's different ways to trade. You could use Bollingers, and this is like probably sticking out at the top of a Bollinger, and people are probably doing a trade that way. But using this current trading strategy, which I'm kind of highlighting, it wouldn't play into it. So it's just not clean. It's not a clean setup. And so we still have this giant fair value gap. And so the real trade is trying to get to the top of that. And if you go on a higher time frame, if you have confluence with this fair value gap, it increases the odds. So it drops down, and we get into this pocket here. This would have been the entrance. I would probably entered here on this down candle, and you got positive slope here. You got a buy signal there on the CCI, and also you got your fair value gap here, so you have a target. It's likely to go higher. It's just going to want to squeeze to that. And sure enough, it did. It squeezed to it, came back. I would not have stopped out, and then it ran higher. What I did instead, I tried shorting here on a bad setup, really, using my strategy, and I just got all tangled, and then I missed that trade, and I was not happy. So anyhow, going forward, I'm going to have a checklist so this doesn't happen again. All right, that's it. I got to exercise. I'm running out of time. So thank you if you tuned in. If you like the content, just whatever, give me recommendations what I could do better. This is going to be green bicep trading. I'm going to have a sub channel in green bicep that's going to have some stuff. And I'm learning. I'm not a professional trader by any means. But I've learned a lot in a short amount of time, and I could definitely tell you about mistakes. All right, thank you.